Today's topic is basically a business plan. Now, let's understand what do we mean by a business plan. In a very simple term, the business plan is a written statement of what an entrepreneur or entrepreneur possess to take up. It is a kind of guide that force or a course of action that entrepreneur hopes to achieve in his or her business and how he is going to achieve this particular plan. Now, in other words, if we say a business plan serves like a kind of a big roadmap to reach the destination determined by an entrepreneur. Webster News 20th Century Dictionary defines a project as a scheme, design, or proposal of something that intent or a devised. Let some important definition of the business plan can be presented in a such a way. Now, business plan, let's define it, is a term by a different name of a different intended interest audience. For example, when presented into the bank, it may be called as a loan proposal. A venture capital might call it as a venture plan or an investment proposal, and a common man may term it as a project report. But let it called as any name, but then it is a basic purpose is same, that is to serve the roadmap in setting the business as an on enterprise. Now, what are the different significant for the business plan? Now, if we argue that there are arguments which have made and against in return writing a business plan, but then the argument advanced against writing a business plan is that it involves the cost, especially when some outside consultant or an accountant or a lawyer cost, especially when some lawyer are probably they are hired to write the business plan. Now, one of the reasons for not probably writing a business plan is to fear prematurely closing of all the new ventures. The major argument that are made in favor of writing a business plan is reducing the anxiety and the tension in running the business enterprise. Writing business plan is especially useful for the entrepreneurs who require financial help from outside sources like bank and the financial institutions. The reason is that the outside sources advance funds to the entrepreneur based on the soundness of their enterprises as reflected in the business plan. In nutshell, the writing a business plan is not without its cost and sacrifice is nonetheless the benefit of its outweigh its cost. Now, an objective without a plan is just a dream. Until committed to prepare the intentions as seek without the soil, sail without the winds, or mere the wish which do not lead to the execution. Without the execution, there is no payoff. The preparation of the business plan is a project report for the great significance for an entrepreneur. But then the business plan basically serves the two essential functions. The first and the most important function of a business plan is like a roadmap. Now, it describes the directions for the enterprise that they need to go for. That is, what are the goals, what they want to be, or probably how the enterprise is going, and what are the and how they should actually go. It enables the entrepreneur to know how he is proceeding in the right direction. Some they may hold the view that without a well spelled out good and the operational method and the tactic, most business flounder on the rock of the hard time. The second functions of the business plan is to basically attract the lender and the investors. Although it is not mandatory for all the small enterprises to prepare a business plan, but yet it is useful and the beneficial for them to prepare a business, probably a project report for the various reasons. The preparation of the business plan is beneficial for those small enterprises which may apply the financial assistance from the financial institutions and the commercial banks. Now, it is on the basis of business plan, the project report, that financial institutions make appraisal if the enterprise requires the financial assistance or not. If yes, how much probably similarity other organization which may provide a various assistance such as work shared, raw material, shared margin, money, etc. are also equally interested in knowing the economic economic soundness of the proposal. That is, how the proposals are sound enough for the businesses. Now, in most of the cases, the quality of the firm's business plan actually weighs heavily in the decisions of the lend or investment funds are concerned. Now, research evidence reveals that many firms, of course, probably start without the business plan. Speaking alternatively, the implication stages starts with no plan, that is guide map. But most of these firms realize eventually in the hard rock, the business environment, that they need to recreate their beginning, write their business plan at some point and down the map. The fact of the matter that is today is highly uncertain and competitive business environment. Only most reluctant entrepreneur with the simplest business concepts avoid writing the business plan. Now there are very significance of the business plan that can be expressed in terms of, if an entrepreneur fails to write a business plan, he plans to fail or his or her business. Now, business plan is basically an internal or integral part of the management for the financial institutions. It should build the institution's aims and objective. It is a document conclusion of how business will create its resources to achieve its goal and how institutions will evaluate the progresses. Business plan is an inclusive plan which is the outcome of the comprehensive planning by the institution's managers and management. It should be practically predicted market demand, customer-based competition, ecology and the economic conditions. The plan must be minor sound banking standard and illustrate the practical assessment of the risk with the respect of economic and the competitive conditions in the market to be served. As an institution, will special objective or the focus like debit card, credit card, trust only cash management, banks should actually domicile the special or the unique characteristics in detail in appropriate section of the plan. Now let's understand what are the component of a business plan, that is how the business plan is created from the idea generation to actually preparing the business plan is concerned. The first and the foremost thing any entrepreneur should need to do in terms of creating a business plan is concerned is a pre-feasibility study. Now pre-feasibility study or a feasibility study is nothing but the provision of as a filter, cleaning and screening of the ideas with the absence of potential for the building a successful entrepreneurship. An entrepreneur promises the required resources for the constructing a business plan. On the other hand, if we see, a business planning is probably a planning tool or a machinery used for converting an idea into the reality. Now construction, it can actually construct on laying a base of a feasibility study, but ensures more comprehensive examination of the business are taken place. It is very important to motivate the feasibility study whenever necessary by entrepreneur, as they target the workability and the profitability of a business venture. Now it regulates if the business plan is viable or not, so that the client's money, time, efforts and resources for an entrepreneurship could be served. Criteria for selecting, the next step is to criteria for selecting the product. Now mostly it is preferred to select the bunch of the criteria depending upon which selection of the product could depend on. The rank or the cost or the weight are the allocation of each criteria to achieve an objective of an examination. There are basically three criteria or probably three steps in order to find out the best product or the services to be offered to the end customer by the entrepreneur. The first is the idea generation. Now under the idea generation, the idea or the investment opening come from the different sources. Like probably sometime it comes from the business, or sometime it comes from the economic newspaper, institution for the research, sometime it is a consultative firm, sometime it is a natural resources, university, competitor, or many more. But idea generation basically begins from a simple examination of a business strength and the weaknesses. Ideas are also spurred through brainstorming, desk research and different types of management consists and the procedures. The second is an evaluation. Now evaluation is nothing but the screening or filtering the product idea, that is initial stage of an evaluation. They mark a potential value of a product, time, money, tool required. Probably sometime it is fitting of the potential product into the business long range sales plan and the availability of the skills people to monitor its marketability. Every product or assets that are identified should be modestly examined. A pre-feasibility study is expected at the stage in order to get the clear picture of the different associated aspects like cost and the benefit of the product, market, technical and the financial aspects, etc. The third stage is choice. Now product that is actually commercially viable, technically feasible and economically desirable is chosen, and relevant machineries are set in terms of production is concerned or set in the motion. The second stage or the next stage is basically the ownership. Now, ownership of a business is the first decisions to be made in terms of constructing a business is concerned. The main reason of the ownership of the resources are the being a person wants to become a sole trader, a person wants to become wants to have a partnership firm, or probably wants to become a shareholder or the stakeholder of the business. Now, sole ownership means probably a decisions taken by himself or herself, and all the profits are owned by the owner itself. However, probably sometime it may happen that the sole traders they need to monitor the lot of responsibilities and duties and needs to work extremely hard. Establishing a partnership makes it possible to distribute basically a workload, but then profits also needs to be shared with the partner as well. But there are many conflict between the partners too. Now, establishing a private company makes it possible to increase the extra capital to the business by selling the shares as well. Now, in contrast, if we see the building up a company's need and the time and the paperwork, shareholders take a portion of the profits as their investment. But when the business they expand their operations across the nation, it declares the public company and shares are to be traded in the shareholders. Now, the next component in terms of business plan is that the business plan is, as we discussed, it's a roadmap that provides a direction so a business can plan its future and helps to avoid the bumps in the road. Now, the time when we speak on making out our business plan thorough, it is accurate, the keeping up to date, and it is investment that pays a big dividend in a longer run. Now, new business plan should be confirmed in a generally accepted guidelines regarding form and the content. Now, each section should include specific element and address relevant questions that the people who read your plan will actually likely to ask. Generally, the business plan has the different component. The first component is a title page and the content. The business plan should be actually presented in the binder with probably a cover list, the name of the business, that is the name of the business or the names or the principal, address, phone number, email ID, website address, date, etc. Now, one have to spend a lot of money on a fancy binding or the cover as a whole, but then the reader wants a plan looks more professional. It is easy to read, at the same time it is well put together. Now, it includes some information on the title page. If the company have a logo, one can actually use the logo as well. Now, a table of content follows probably an executive summary or the statement of purpose that reader can actually quickly find the information on the financial data what they need to understand in terms of business plan is concerned. The second is a description of the business. That is, the business description usually begins with a short explanation of the industry. When describing the industry, the discuss what's going on now as well as the outlook of the future. Do necessary the research so they can provide more information on all the various market with the industry, including references to the new product or the development that could actually benefit or hinder the businesses. Based on the observations, probably on the reliable data, it is very important to understand the footnote and the cite your sources of information from where the data is being collected, because the business description of the business plays a very important role for an investor or a banker when rendering any kind of a loan, or when they want to lend money in the business, or when they want to invest in the business. They have a clear picture that what company is looking out for. Now, when describing about the business, one can actually set out fall into the wholesale, retail, food service, sometimes it is manufacturing, sometimes it is hospitality, so on and so forth. Whether the business is a new or established business, they can say whether the business is sometimes a sole proprietor, a partnership, or a subchapter, or probably a shareholders or a joint stock company. Now, next list in terms of business description is concerned is the principal and the state what they want to do as a business operations are concerned. Now, continuing with this particular information on who business customers are, or probably who are the prime target customers of the business, how big the market available for the product or the services what the business is intended to sell, and how the product and services are distributed and marketed in the business. The next step is describing the product and the services. As it's a most important aspect of the business plan. That is, the business description can be a few paragraph or a few pages in length, depending upon the complexity of the plan. But if the plan is too complicated, it is very important to keep in mind the business description in short, describing the industry in one paragraph, the product in another paragraph, and the business and its success factors in two or more paragraphs as a whole. Now, when you describe your product or the services, make sure that the reader have the clear idea of what you are talking about. That is, the investor needs to understand that what basically the product and the services are being offered. Explain how people use the product and the services, and talk about what makes the product and the services different from other available in the market. At the same time, it has to be very, very specific about what set of business apart from what has been already available in the market. That is, what the competitors are already given in the market. Then it is important to explain the business have a competitive edge over the competitor, because the competitive edge is nothing but having a edge or having an added advantage over the competitor, and that's when the company can actually have their own market share, and that is why the business will be profitable. Unless and until company do not have a competitive edge, they cannot be probably a successful company. Now, describing the factors one need to think about the successful business. If the business plan is used as a financial proposal, explain why additional equity or the debt will make the business more profitable. Give a hard, very important fact, such as probably a new equipment will be created and an income stream of, let's say, a $10,000 per year, and briefly describe how this particular things will take place. Now, other information to the address here is probably the description of the experiences of the key people in the business. That is probably a owner or manager or an employee. Whoever reads your business plan in terms of the proposals are concerned wants to know who are the suppliers, exports, who are if the export import business are taken care of, the business owner and the managers who are going to take care of the entire business operations, because their experience plays a very important role in any kind of a success of the business. Now, the next step is a market analysis. Now, it's a most important aspect of any business plan is the market analysis. A thorough market analysis basically helps to define the prospect, as well as it helps in establishing the pricing, distribution, promotional strategy, and that will allow the company to be successful. At the same time, it will help the company to have a competitive edge in a short term, at the same time in a long run as well. Now, if we start with a market analysis by defining the market size in terms of the size is concerned, probably a demographic, structure, growth prospect, trend and sales potential, etc. Next, determining how often your product or the services will be purchased by your target market. Then figure it out how potential annual purchase are, and then figure it out what are the percentage of the annual sum of your entire either have or can attain. Keep in mind that no one gets 100% market share, and that something is as small as 25% is considered in terms of a dominant share is concerned. Now, the market share will be actually a benchmark that tells any business that how their entire business is running, or the market planning projections are taken care of. But one needs to understand the the position strategy or positioning strategy in the business plays an important role, because unless and until company or the organization they cannot have the set position, they cannot actually run their own business a profitable one. Now, how to differentiate the product and the services offered by an entrepreneur that of a competitor, and at the same time how to determine the market niche will actually fulfill the gap, or probably will define the positioning of the business. Now, positioning basically helps the entire business in establishing the product and the services identify within the eyes of a purchaser. That is basically the target market of an entrepreneur, or the enterprise rather, I would say. Now, if we elaborate in a bigger way, if we see that the positioning actually has it's been created using the USP, that is unique selling proposition, because unless and until company cannot attain the unique selling proposition, they will not have enough positioning in the market. Now how to price the product is also a very important aspect, because perhaps probably most important market decision is pricing. Now it is one of the most difficult to make the most small business owner, because there are no instant formulas available, but then many methods establishing a pricing are available to the entrepreneur, and this are probably a cost plus pricing, wherein mainly the manufacturers to assure that all the costs plus both fixed and the variable cost are covered and desired profit and the percentage are attained. Second is demand of the pricing is usually the company that sells their product through the variety of sources at the different price based on the demand. The next is a competitive pricing, wherein the company decides to sell their product or the services as per the competitor's pricing. That is, the pricing will be decided based on the competitor's pricing which has been offered by the competitors, so that there's always a room available for the enterprise to have a market share. The next is a market price markup pricing, which is used mainly for the retailers to calculate adding desired profit on the cost of the product. Now after determining the pricing, the most important aspect is the distribution. Now what is a distribution? Distribution is include the entire process of moving the finished goods or the product or services and making it available to the end consumer at the desired place. Now make sure that the entrepreneur have the competitors distribution channel before deciding whether to use the same type of channel which competitors are using, or whether to have an alternative way of providing or making the resources available to end consumer. Now all these things comes into the strategic advantage. Now after the distribution, the promotion strategy also is the most important aspect, because it includes all the ways to communicate with the marketers to make them aware of the product or the services. And to be successful, your promotion strategy should be addressed in terms of advertising, packaging, public relation, sales promotion, personal sales, etc. The next aspect is a competitive analysis. Now under the competitive analysis, it's nothing but identifying the strength and the weaknesses of competitor within the market, strategies that will provide a distinctive advantages over the competitor. Next is barrier that can be developed to prevent the competition from entering into the market, and any weaknesses that can be exploited in the product development cycle are the basically gives the competitive advantage. Now if the first step in the competitive advantage is to identify both direct and indirect competition for your business, both now and for business for the future as well. Now once you've grouped your competitor, start analyzing their market strategies and identifying their vulnerable areas by examining their strength and the weaknesses. This will help you to determine your distinct competitive advantage. Whoever reads your business plan should be very clear on who your target market is, what your market niche is, exactly how you stand apart from the competitor, and why the business is successfully doing it. The next aspect is operations and the management. The operations and the management components of your plan is describe how business functions on the continuous basis. The operation plan actually highlights the logistic of an organization, such as responsibility of a management team, tasks assigned to each division within the company, and capital and the expenses required related to the operations of the business are concerned. The next and the most important aspect is the financial component of the business plan. After defining the product, market, operations, and the next area to turn on is to pay attention to the financial statement. That is actually a form of a backbone of your business plan. Income statement, cash flow statement, and a balance sheet. Now, income statement is a simple and a straightforward report on the business and cash generating ability. It is a scorecard basically on the financial performance of the business that reflects the sales are made and when the expenses are incurred. It draws the information from the various financial models developed earlier, such as revenue, expenses, capital, and a form of a depreciation, cost of goods sold, etc. Now by combining all these aspects, the income are calculated by deducting all the expenses like selling expenses, distribution expenses, cost of goods sold or depreciation, and the net profit has been arrived. The next is basically the cash flow statement. That is, it's a statement which shows all the total of cash inflow and cash outflow, and at the end it reflects the cash available with the business in hand. And the last and the most important aspect is basically the balance sheet. Now, balance sheet plays a very important role in the entire functioning of the business is concerned, because it's a statement which states all the assets and the liability available in the business. Now, unlike previous year, the balance sheet now plays an important role, because when the business is expanding or business is doing well, the company can actually always compare their financial statement or their balance sheet from the previous year's balance sheet, and they can determine whether the company is actually progressing or not. So there's a list of all the liability, list of all the assets are there, which shows the company's feasibility or the or the availability of the assets are concerned. And on the base of balance sheet, if business needs to take any kind of a loan or any kind of a finances from any of the financial institution, it is possible to take up that as well. Now, apart from this, there are certain other requirements of which an entrepreneur needs to take care in terms of preparing a business plan is concerned, are the different documents. Now, in this particular section, there are possibilities that there are other documents which may require, like for example, if somebody wants to start a business into food and a restaurant area, they need to have a affiliation from Food and Drug Agency. Now, that is nothing but another documentation which is required. Now, sometimes it is possible to have certain documentation, but then some people they think that probably a business plan is unless you are trying to borrow money. But of course, it is very true that one needs to have a good business plan in order to attract the lender to invest in the business. But at the same time, business plan is a roadmap which helps the business to have a smooth flow or the smooth implementation of all the plans which is entrepreneurs deciding, so that the new opportunities are exploited or probably they utilized to expand their business and to establish their business. So this is how basically the entire preparation of the business plan takes place. It is very important to pay attention to each and every aspect what we have discussed in terms of entire content of the business plan is concerned, because if any aspect which is not covered in the business plan, this will lead to an unsuccessful business in the near future, or probably the implementation will be unsuccessful.